Good morning, everyone. Welcome to the TradeXchange weekend market webinar. It is Sunday, July 10th. First, we'll go over the previous week, and then we'll do a quick update on the week ahead. It seems that last week's action was all about recession talk. But the question on a lot of traders' mind is, how can a recession be a true recession if employment is still so strong? So basically, initially, what is a recession? What's the breakdown of a recession? A recession is a decline in general economic activity. We used to identify recession usually as 2 consecutive quarters of a negative GDP, with usually a rise in unemployment. Many economists now identify recession as a significant decline in economic activity spread across the economy, lasting more than a few months. On average, a recession lasts about 10 to 12 months. So the question comes down to it, are we in a recession? The answer, who knows? We can provide an argument of economists who believe that we are in a recession right now. But then we can have another set of economists who say we are not in a recession or even close to it. So who is right? That is what makes a market. Who knows who is right? In the end, it's the business we've chosen. So your guess is as good as mine. Let's do a quick recap of the week. Markets posted modest gains. NASDAQ did edge out stronger of the 3 this week. The U.S. labor market continued to show strength and growth as we saw an increase of 372,000. Unemployment rate at 3.6% for the 4th month in a row, and average hourly earnings rose 5.1%. We did see a yield curve inversion for the 2nd time this year, and crude oil did break below $100 for the first time since May. Next week is the start of earnings season, starting up with the banks. Some of the big banks reporting next week: Citi, JP Morgan, MS, Morgan Stanley, and Wells Fargo, WFC. We also have the most important data point release this month, the CPI. In May, we saw the CPI at 8.6%. And this week, we are expecting a print of 8.8%. Right now, let's take a quick peek at the rest of the week ahead. Top earnings, as we mentioned earlier, we have basically a bank earnings week start. On the economic upcoming U.S. and world events, on Monday, we have the Japan PPI and Fed Williams speaking. On Tuesday, we have the Germany ZEW survey, the RBNZ announcement, Fed discount rate minutes, the WASDE report, Fed's bargain, and the EIA short-term energy outlook. So Tuesday does seem like a pretty important economic day across the board. Wednesday is the day that we are all waiting for. Wednesday is CPI day. Wednesday, we do also have the beige book and the EU industrial production. Wednesday does have the Canada BOC announcement as well. Thursday, we have the PPI final, China GDP, industrial production, and retail sales. And on Friday, we have the U.S. retail sales, industrial production, consumer sentiment, options double witching. We also have Fed Bostic speaking on Friday. So we have a full week of information, economic headlines, and Fed speakers to stay tuned for. It's going to be a very interesting and busy week. Let's jump quickly over to the company events for the week. We have our top shareholders meetings and top analyst investor calls. On Monday, we got DE and Target TGT. Tuesday, we do have as we always mention on these calls, shareholder meetings typically are not, typically do not have any market moving independent company headlines, but we always have them on here just in case. And the top analyst investor calls, we always post these as well because sometimes we do have any updates coming from a company on those specific analyst calls. So this is your list of your company events for the week. Scrolling down, we have your top conferences for the week. As always in the news desk, if anyone has any questions or comments, you can always shoot us a message on the Ask the Desk, and we'll provide you any details on any individual companies reporting during these conferences. Economic calendar for the week: Monday, We just have John Williams on tap to speak. We'll be watching. On Tuesday, we have your Thomas Barkin speaking at 12:30 p.m. So we keep a close eye and ear on his commentary. Thursday is CPI day. Correction, Wednesday is CPI day. So we have a CPI on Wednesday. We have your petroleum report as well as the beige book in the afternoon. So Wednesday does seem like a very important day on the economic data side. Thursday, as always, we have your jobless claims. We have your PPI and the natural gas report. On Friday, we have retail sales, import and export prices, Fed speak by Raphael Bostic. We have industrial production, business inventories, consumer sentiment. A very busy week on the economic data front. Stay tuned to those times as they are and will be market moving. Taking a quick peek at the performances, we did have a chart here of a 1 year and 5 year performance range. Earnings for the week, not too much on the beginning of the week, but on Wednesday we do have Delta Airlines, DAL, and Fastenal, FAST on Wednesday morning. Then the banks start reporting Thursday, JP Morgan and Morgan Stanley, JPM and MS. And on Friday we have C City and Wells Fargo, WFC. So we'll keep a close ear and eye on these reports. In each comparison, as always, we have a 3-year up here showing the initial move from the COVID drop, so we can get an idea of where markets are to that initial drop. Target probability for the week, as you can see, it did pop. We did actually, traders are possibly betting on a 1 full basis point of 7.6% of a rate rise. So we'll keep an ear and eye out on this number to see if this changes throughout the week, especially following that CPI report on Wednesday. Year-to-date percent returns for the weekend. We did see a couple upticks here and there, but nothing substantial move-wise. We did see nat gas take over the top again, popping up about 12% following their report on Thursday on their the EIA report. So we are watching that. The AAII Investor Sentiment Survey from last week, we did see a little downtick in the bullish sentiment, a little downtick in the neutral sentiment, and a little uptick in the bearish side. We are seeing this continuously flop back and forth from a 2 to 5% move on the bullish to neutral to bearish sentiment. So we always keep a close eye on that just to get an idea of some investor sentiment survey. FDA calendar for the week. Tuesday, Wednesday, Thursday, Friday. We do have some specific names that should be reporting some data. Tuesday, BGNE and ATRA. Wednesday, we have Bristol Myers, BMY, REGN, and SCPH. Thursday, ALNY and ZYNE. We have a couple IPO lockup expirations coming up on Tuesday and some expected IPOs opening this week. Right here, we do have our sector outlook year-to-date performance. Continuing that energy is still the clear leader on the upside for this year. To the second column, we do have a 3-year look, and we do continue to see that the infotech still up about 65% on the 3-year basis. But most of the other outlook sectors are in the red as energy continues to stay front leading this week as well on the year-to-date percentage. Some charts quickly. We have the SPY chart on it with the moving averages. SPY daily. We always have a little note that we try to put in there on a thought process and any changes to the chart. On the SPY on the daily, the chart is playing right to trend lines. We added a short-term uptrend this week, but our recent trend lines continue to prove key as we see a continued test of the previous trend line at this level once that gap fill was done the previous weeks. So we are watching that level as the initial resistance on our side, followed by these downtrends on the upside break or this uptrend right here on a downside move. Taking a peek at the SPY weekly, continuing to build that band at this level of the range, testing the high-end resistance point as we mentioned in the daily chart. SPY weekly as well, continuing to just work off of that band on that side. Taking a peek at the VIX weekly. We've been posting this chart on every week. It's continued to stay in this range. Once we get a substantial move to either the upside or downside, we could see a substantial move in markets. But as of right now, we are seeing continued range-bound trading in the VIX. Your 10-year yield weekly tested that support level at 2.8% this week as well. Traded right back up to that downtrend level. So we are watching the 10-year yield this week, as it is CPI week, in regards to any movement following an upside break on this downtrend, on that retest of the 3.5 level, or a continued retest of the 2.8, a break to that initial around 2.5, 2.6 level. So we are watching the 10-year yield following that CPI report on Wednesday. Another look at the 10-year yield weekly on a moving average basis. The HYG, we mentioned this last week. Last week we mentioned this on a watch as a range-bound move was being built. We mentioned downside watch at 73, which a low of this week hit 73.03. We mentioned the highs on watch of 75, which 74.96 was hit. So it continues to stay right in that range. We continue to wait and see on a directional move on volume to the upside or downside, which we'll be mentioning in the news desk if it is broken. Triple Qs on a weekly. It seems like a lot of charts are building ranges. Another range setup. We're watching on the triple Qs, and then we have triple Qs on a daily. We see a clear test of the 50-day moving average. We'll see if that continues this week. And, if that is broken or a test and a drop back to earlier lows. So that's the week ahead. That's the recap of the week from the TradeXchange. We'll keep it open for a few minutes if there are any questions. So we'll go radio silent for a minute or two. If there are any questions, please just jot them in into the chat box, please. All right, we just have a quick question. The question is, you mentioned a yield curve inversion. What is that? So a yield curve inversion is when the 2-year Treasury bond yield rises above the 10-year bond yield. A concern on a short-term interest rates, as well as the possibility that a recession is on the horizon. So that's the basic ideal version of what the yield curve inversion is. It's the thought process of a possible recession in the horizon. Keep in mind, we did see that conversion as well lastly in April. So we'll keep a close eye on this discussions and see if that has any impact on the economy or markets. So we'll keep it open for another couple of minutes in regards to questions. So the question was, do we believe the CPI is the most important data point moving forward? Yes, I think the CPI is one of the most important data points moving forward. In the past, it always used to be the employment report. It's all about the employment report. Now, it's all about the CPI. What's inflation doing? Every possible economic data point that has some workings into inflation, I think, are more important these days, and are the ones to watch to give an idea or dictate a directional move in markets. So yes, we believe CPI is the most important economic data headline that we are seeing this month. So members, if there aren't any more questions, we want to thank everyone for joining us on our TradeXchange weekly recap and week ahead. As always, if you have any questions, you can always email us or shoot us a message on the Ask the Desk. We want to thank everyone for joining us today. Enjoy the rest of your Sunday. Check the news desk as always to get yourself ready for tomorrow morning. And we'll see you all on the squawk first thing tomorrow for the pre-market prep. Thank you. Enjoy. We'll see you all this week.